Hi, I'm Lucie Ellis, Executive Editor for In Vivo, and I'm here at BioEurope Spring in Vienna, and I'm joined by Roel Bulthuis, the Managing Partner for INKEF Capital. So thank you for joining me today.
Thanks, Lucie.
So you're based in Amsterdam, a European investment group. So you have recently taken over one of the funds you have there at INKEF, which has one limited partner, which is a slightly unusual setup. So who is that LP, and what are the differences associated with having just the one involved?
Yeah, that's a fair question. So INKEF Capital is a 500 million euro fund, as you said. We're based south of Amsterdam, invest in the healthcare and in the tech sector. Our LP is ABP, which is the largest pension fund in the Netherlands and probably one of the largest pension funds in the world. That makes them an asset manager. They have close to 500 billion euros under management that invest across asset classes worldwide. The reason for them to get involved with INKEF and invest in our fund is because they feel that besides generating a financial return on their investments across their portfolio, obviously, they also want to see that there's an impact by a venture firm on the startup ecosystem in the Netherlands and broadly across Europe. So we have that kind of twofold objective. We're a venture firm, like any other venture firm. We invest on the same basis. But we also want to make sure that through our involvement in companies, we help create new biotech companies, new tech companies that have a significant and long-term impact on the sector.
And it's more of the lifetime is long and it's more of an evergreen setup. So how does that work?
Yeah, it's not exactly an evergreen. One of the things that we've observed about the sector is that, especially on the healthcare side, if you look at the life cycle of the traditional venture firms in Europe, a 10-year investment cycle, it doesn't always connect well with the timelines that we need for product development or technology development in healthcare, right? So just simply the timeline from discovery to clinical development to commercializing a drug means that if I'm in a 10-year fund cycle firm, and if I'm early on in the cycle of my fund, I can invest in companies, I can stick to them for 5, 6, 7 years, which probably means that I have my first 1 or 2 assets developed, which is usually the time that you start to see that I'm actually validating my platform, I'm validating my thesis that my platform of bispecific antibodies or my cell therapy, whatever I've started with, actually makes clinical sense, makes commercial sense for my patients. That's the time where, in an ideal situation, you would say I'm doubling down on my investment. This is where I want to accelerate my investment in this company because now I have so much more certainty where I want to be. So we've chosen to set up the fund with a 20-year fund cycle in order for us to have a more longer-term commitment to our founders and to be able to support founders that are successful in building sustainable companies instead of having to look for liquidity early on in the life cycle of our companies.
So it's a slightly different approach. Do you have some examples of how that's worked so far?
Well, the fund is only a few years old, so a lot of this is ambition rather than practice, right? You'll see us investing in, to give you examples of companies that we've invested in, for instance, Scenic Biotech is an Amsterdam-based company that we've co-invested in with Biogeneration Ventures. This is a pure play platform technology biology company that will have, based on the science that they're working on, will have multiple ways of approaching disease. This is a company that we invested in with the objective to build a broad portfolio of assets around that. Yeah. So we want to be in there for the long term. We co-led that initial financing. We're going to be an active investor going forward and really help that founder team build up a substantial activity there.
And you're not exclusively just in life sciences, you're also around the health technology space as well. Yeah. So why was that decision made? What's the difference there? And then what do you look for in new investments?
Well, so it's even a little bit broader than that, right? So we have healthcare and we have tech. Tech is completely away from healthcare, so these are investments in software, in IT, in technologies related to that. Our healthcare investment focus goes across therapeutics and medical devices, what we've done historically, and in the middle between the two, we've made our first investments in the field of digital health. The fundamental focus of the firm is to focus on those two areas, to have that impact in tech and in healthcare. We think that also in terms of portfolio constructions and return expectations, it's useful and helpful for a long-term perspective to have those sectors, so to have that interaction. And between the two, so I've made investments in digital health in my previous firm from a healthcare investor perspective, where you miss that edge of sort of being able to sort of judge the technology and the business models on the technology side. To be able to have those two technology teams in parallel and working on deals is a much more comfortable situation to do deals in the digital health sector. So I think it's an integrated approach to venture, and where tech and healthcare converge, which is in many parts of our sector, that's where we can play a role as well.
And how does the interest of the fund split then between those two areas? Is there a percentage that goes to one or the other?
Yeah, we don't have a formal rule for that in our fund mandate, but it's something that we're as managing partners, we're trying to keep that in balance, also to make sure that sort of towards our LP, we have that impact on both sides.
And how many investments are you looking to make? Do you have a target for the next 12 months, for the next year?
Yeah, I think you'll get the same answer that you'll hear from a lot of VCs. We're not going to set a target for a number of deals. We'll do deals when we see the right assets. We've certainly, and I've joined the firm 1st of Jan. That means that we have a lot of ambition now to do new deals. In the first quarter of this year, we've announced 2 deals already. So we made an investment in Calypso Biotech. So that's 2 deals in healthcare, in Calypso Biotech, as well as in Aidence, which is a digital health company. Let's say that sort of in general, we're modeling our portfolio on commitments of about 15 to 30 million over the life cycle of its total lifespan of our companies, but have the flexibility to grow significantly beyond that if we see that there's a reason to do that. So we have a hard cap at 70 million euros per individual investment. So that leaves us a lot of flexibility that if we, within that sort of initial investment scope, if we see the opportunity to expand beyond that, to help accelerate the development of our companies. And
people looking for investment then, what should they be pitching? How should they be coming forward? What's the golden rule?
The golden rule, or the golden tip. We get really, really excited when we see great science, when we see fundamentally new science that translates. And that doesn't mean that when we look at an investment the first time, we need to see the data that proves that it translates into a clinically meaningful endpoint or commercially meaningful endpoint. But what I want to see is a thesis by founders of how their ideas, how their initial hypothesis translates into something that is commercially meaningful and meaningful for a patient, because that in the end is what we're investing in. So we're therapeutic area agnostic, we're therapeutic modality agnostic. We invest a lot in teams, so we want to see the people with the vision of how they can take their science into something that becomes a real product.
And being based then within Europe, what's the investment landscape and the atmosphere like at the moment? And what are you hoping for as we look forward in the year?
I think there's a couple of good developments in the European market. So we're seeing that many of the venture firms that kind of shied away from early stage investing kind of come back to that a little bit. So after the financial crisis, where a lot of people felt that they had to move to more mature assets, I think that's coming back. We've all seen that. I think especially a number of the corporate venture funds, but also some of the VC firms that have been sticking to their fundamental principle of doing early stage investments, they've been the most successful in this market, and that's where a lot of the community moves back to. That means there's more good ideas with strong backing. I think the other thing that we're seeing is a concentration of capital around the right ideas. So where we have a history of drip feeding and developing assets in such a way that many pharma companies would say that in general their take on European assets was that they're slightly underfunded. So we're not building the same teams, we're not putting the same resources behind our molecules as we see with our US counterparts. I think that's moving. So that's a couple of good developments. And then what I find very exciting to see is that culturally, and this might sound trivial for some people, but culturally, in my perception, in many European countries, the position of an entrepreneur vis-a-vis the position of an academic has always been, it's not always been that as a successful scientist, the aspiration to become an entrepreneur has not always been very high up for many people. And what we're increasingly seeing with that our external environment is changing and the successes that we see in tech is that we see more and more young postdoc PhDs that are brilliant scientists, but also see the aspiration to become entrepreneurs on the basis of their skills, of their expertise, they see that as a good route to go forward. And that for us is where we find the best deals.
So you're hoping to see more of that as...
Absolutely, yeah.
Good. Well, lovely to speak to you, Roel, and I hope you enjoy the rest of your conference.
Thank you so much. Thanks for taking the time.